Welcome back. Well, the market's seen a bit of a slip after the bank Nifty hit all-time high. There was a bit of a slip, and the Nifty as well, because of that, has slipped in the red. In fact, the Nifty is down about 31 points right now. So there's clearly some bit of profit taking. Today's weekly options expiry as well, and the market, of course, is not obliged to go up daily, right? IT stocks have become weak once again. That's one space where there's clearly some correlation still with what's happening in the US market. While the rest of the market may have moved on, IT still sort of dances to the Nasdaq tunes, and 1.2% down on IT index once again. Mitesh is back with us. Mitesh, some profit taking in banks, IT still underperforming, and the Nifty down about 32. Do you buy this intraday dip or wait for larger dip? And what are your 10 AM calls?
So, Anuj, I think maybe there could be slightly more pullback if you look at the hourly charts to about levels of 17,930, 920 zone. So maybe around those levels, attempt a long and keep a stop below 17,870, and then still maintain targets of 18,165. So that's the kind of outlook I have. On the stock side, Ashok Leyland seems to be after a few days of consolidation giving signals of a breakout. That's a buy. Keep a stop below 165 here and look for targets of 174. And Whirlpool is breaking down, so that's a stock on the sell side. Here I would recommend selling with a stop at about levels of 1771 and a target of around 1710 on the downside.
All right, Mitesh, thanks a lot for those calls. Let's now move to commodity markets. Manisha Gupta is joining us. Manisha, hi, good morning.
Morning, Anuj. Thank you for that. I'm looking at the crude oil prices where we are trading at a one-week highs right now. We did see prices at a $95 per barrel. From those kind of levels, yes, there is a bit of a profit taking. We are holding 94 or thereabouts. But the strength also has been seen in crude petroleum products, where you have the natural gas now gain up by nearly 9% overnight. And 719 is on your screens. $9 per MMBTU is what we are trading in the global markets as well. There are various reasons for the rise that we've seen in natural gas and the crude oil prices. But majorly, it has to do with the IEA statement, which says that there is going to be a large-scale switch from gas to oil, and the demand is going to be quite strong. The switch could actually lead to 7 lakh barrels per day of a demand between March to October, and this is double of what we saw in the previous year as well. The global inventories have been on a constant decline as well, and the IEA also says that they are looking at a strong demand growth in 2023, while OPEC clearly says that they're looking at strong demand in this year itself and the next year too. When you look at the numbers that have been put out by OPEC there, they are expecting a demand increase of 3.1 million barrels per day in this year and a buildup of nearly 2.7 million barrels per day in the next year as well. So strong numbers coming in from OPEC and IEA as well. The strength also comes in on the back of decline in US dollar index. The markets also are looking at a likelihood of a US rail stoppage. Now that really could be looking at supply disturbance coming in for the Northeast in case of US there. The US emergency oil reserves also are at the lowest since 1984. So whichever way that you look, whether it's about supply disruptions, the weakness in US dollar, IEA projecting strong demand for this year and the next, all of these factors have been supportive in case of crude prices. This is another development that the markets will keep an eye on. So the US rail stoppage due to the labor dispute is what the markets are looking at. We do understand via reports that there are 3 unions representing nearly 60,000 workers, and they would be looking at a deadline of Friday night. If there is an agreement that is reached, then the shutdown can be averted. If not, then we could be looking at some support. China also has some positive news coming in. Chengdu today ends COVID lockdowns completely, so some demand from there could also be coming in. And then apart from that, Total also is looking to cut nearly 2.38 lakh barrels per day production at Port Arthur refinery. So as I said, a lot of disruptions in sense of supplies, and that can be seen in sense of premium in case of crude prices.
Okay, thanks a lot, Manisha, for that. Well, a lot of big movers on the downside today. Hindalco is down almost 3% odd. Nigel is joining in. He's focusing on Alcoa this morning. Nigel, over to you.
Well, that's right. Some pieces of news that came in overnight seem to be plaguing both the ferrous as well as the non-ferrous names. Now, let's start off with Alcoa first. That stock was down close to 10% overnight because the company sounded circumspect with regard to aluminium demand at the conference that was held. That's the Morgan Stanley conference. So that was one piece of news. The second piece of news was that yesterday US steel stocks, they were lower because Nucor, well, they gave in an EPS guidance that was lower than what the street was working with. So that's why we saw a lot of those US steel stocks selling off. And the reason that they pulled back on their EPS guidance was because of their anticipating lower volumes as well as compression in margins. Edelweiss, they say, with regard to the implications on Indian stocks, well, there is little correlation between the US stocks as well as the Indian names out there. But they believe that the earnings, that the earnings outlook is likely to be grim in the second quarter. Also, they say that they remain circumspect on the sector's prospects in the near term because of a bit of a slowdown that could potentially play out in the globe. So explains why a bit of a rub-off effect, though a direct correlation would not be fair for these stocks. Back to you guys.
A lot, Nigel, for that. So that's the latest on the steel sector, ferrous and non-ferrous, actually. Let's slip into a quick break. Markets have come off a little bit, but on the other side, our special segment, it's the economy. Aditi Nair of ICRA and Mahesh Vyas of CMI will be joining in to discuss whether India's capex cycle has kicked off or not. Do stay tuned in for that.